Leaders from the world's largest private equity firms are gathering in Berlin at SuperReturn International. Leslie Picker is tracking the action on the ground, and she joins us live this morning with a special guest. Good morning.
Hey, good morning, Andrew. Thank you so much. And thank you to Hynes, Wellington CEO. It's a pleasure to speak with you. Your CNBC U.S. debut, obviously a pretty under-the-radar firm, but a giant in the investing world, $1.2 trillion in assets. But a lot of that historically has been in public markets and long-only markets. But you're here at SuperReturn, which is a private assets conference, and that's in part due to the build-out of your private credit business, which you have some pretty big goals for. I'm curious, what is driving your decision to really enter these markets, given the Wellington history? And are you concerned at all by just the overall popularity of the asset class, potential crowding in the asset class, and ultimately when a cycle happens, how it will perform?
So thank you for having me on. I'm very excited to be here. We started, you might not know this, but we started entering the privates business in 2014. And it was really driven by one of our growth investors who was a public growth investor, really recognizing the trend that companies are staying private for longer. And that may seem so obvious now, but back when he really started pushing the firm to get into the privates business, that was not obvious. So we started first with a late-stage growth fund, and over the years, we now have four private equity funds and one hybrid platform. So when you think about the platforms, late-stage growth, biotech, climate, diverse founders, and fintech. And that, it's very adjacent to our public equities. You know, I'm a healthcare investor, and so biotech, the team that works with me on the biotech, it just was such a strong adjacency to our public investing. So that was the reason we got into it. And in the last couple of years, as you said, we've been getting into the private credit space. We have half of our business now is fixed income, so we're very balanced. It's unusual. We're very balanced between public equities and public fixed income. And so as we enter the private credit business, which you know has so many different categories, we're starting in areas of strength. So we have a very strong footprint in public credit, and so we started with investment grade private placements. We have a very strong footprint, as we said, in late-stage private equity, and we're also our second module is growth lending. So we have a lot, as you said, we have a lot of ambitions to hire teams over the next 5 years.
On the macro front, in your recent shareholder letter, you write about the end of easy money era and the unwinding of globalization. As such, we should expect shorter and more frequent economic cycles, structurally higher and more volatile inflation, and greater differentiation in countries' policy decisions. What do you think that means for markets?
I think that what that means for markets is that we're going to see a lot more volatility. That's actually quite good for us. You know, we've been in a one-way market for the past 10 plus years, and when you have more volatility, you have more dispersion, and so I think that's going to be good for active management. I will say that, but clearly we have not been operating. The world has not been operating in a market where you have high interest rates. And I'm going to put my CEO hat on now and not my investor hat on. I think myself and fellow CEOs and across all industries, and I interact with many different types of CEOs, have been operating in a linear world for the past 30 to 40 years. And now we're operating in a world that's not linear because you have you have to deal with inflation. No CEOs have had to deal with inflation except if you were in Latin America for the last 30 years. And so I think we're all learning how to deal with that volatility. And now I'm going to put my investor hat back on. I would expect from that you're going to see some air pockets. When you don't have a linear world and you have a more unpredictable world, and we've just been through COVID and supply chains, I suspect we're going to see some air pockets, and that will be good for active management.
Well, we really appreciate your time, Jean. Thank you so much for joining from the SuperReturn conference here in Berlin, Germany.